Everybody, this is John, and welcome to the free video. So, we got the Trend 2.0 reading, and the markets pretty much didn't collapse today, which is about all that can be said for bulls. They tried to get something going. If we drop this down to intraday, we can see, well, let's look at this at a 5-minute chart. I mean, you saw that for today, you did have a lot of light strength through most of the day with some selling into the close, right? And so it just kind of begs the question, what's going to take for this to kind of to turn around? Well, if we look at IWM and the Russell here, you can see it actually closed up today. All right, so that's important to keep in mind. And if we look at the NASDAQ, of course, you can see that that continues to sell off, and a lot of this is being driven by Apple. And also keep in mind that there are some crazy things going on right now. The dollar index, huge day today, and the squeeze continues to expand, which of course means things like the euro are just getting crushed. And if we look at the bond market here, bond market's rallying. So there's a lot of crazy things going in asset classes. And if we look at the European markets, we can see that they're actually doing well. Okay, as the euro goes down, that's actually really beneficial for those stock markets. So the bottom line is this: is the strong dollar actually going to put a continued damper on the profits here? Well, one of the things that I always watch is that, I always talk about the 21 EMA, and once you get through the 21, it opens up the door to the rest of the moving averages, especially the 89. That's the 200 down there. And once you go through the 89, it opens up the door for a reversal, okay? Meaning that, we could actually see something much bigger happening. Now, the last couple times this has happened, we've pushed through it and we've snapped back. We've pushed through it and we've snapped back. One of the concerns I have here is that the last kind of selling cycles here had a lot of volume, okay? Meaning that people were getting flushed, and here it's a little complacent. And the fact today that the bull, like with that extreme trend reading, we weren't able to get anything done by the bulls was, I think it's a red flag. So I would just say in this market, I just think the worst thing to do in something like this is just to assume that what has worked in the past is going to continue working in the future. Meaning like, okay, I'm going to buy some stuff here and just hold on and hope for the best, because obviously we're in an uptrend. And, there's just some things here, especially like with Apple kind of giving up the ghost, so to speak, that point to this. This could be a little bit bigger. Okay, let's call it, 10%. That would be, that would be normal. So what are the things that we're going to look at? Well, I'm looking at the fact that we're coming into Thursday, Friday before monthly expiration. You do actually typically see a sell-off. Okay, you do typically see a sell-off. So I think we can get some lower prices here. We want to be careful about getting too aggressive on the short side, but we also want to be very, very cognizant about going with the flow. And one of the easiest ways to do that in this kind of a market is just drop it down to more of an intraday chart. Okay. In fact, here, let's just look at price and really kind of drill down into the current downtrend. In fact, it would be easier to do this with, say, the stock market. So we got the S&P futures here. And if we look at this in terms of a downtrend, we can see that we've got a pretty solid downtrend in place. I mean, it's holding up really well. It's fairly steep. And as long as we're within this kind of downward channel, I mean, we've got to essentially break through that channel to the upside before we are going to start seeing anything remotely interesting in terms of a potential reversal. Okay, so that's kind of the main thing here. And that's kind of the intermediate, the immediate trend. Then, of course, we've got this. And then we've got this right here. Right, this one right here. So just kind of keep an eye on it. And at this point, it's innocent until proven guilty. And I would get interested on the long side on any break in the S&Ps above about 46 or so. Otherwise, there's the danger of catching a fallen knife. All right? So that's what we got. You guys have good trading. We're going to dive into a lot of stuff in the premium video tonight, and we'll see you at the next update.